Well, as we enter 2023, there's still a lot of volatility and a lot of uncertainty in the market and a real tug of war between the bulls and the bears. So I want to continue to provide perspective in terms of where we might be for 2023 and really how to set yourself up. And my next guest, his key goal is always to make money in the markets. Let me bring in JC Parets. We've been talking with each other for so many years now. He's the CEO and Chief Market Strategist at allstarcharts.com. JC, great to be with you. Thanks so much for joining us.
Listen, love this. We have been doing this for years and different cycles too. So there's always something different we're talking about. As you know, we're asset class agnostic. It doesn't matter if we're buying gold or shorting Microsoft or, it's just letters and math, Catherine.
Yeah, it's just letters and math. It's a little bit more complicated than that.
It can be. It can be. It doesn't have to be.
Fair point. And for our viewers to understand, your background and what you do is technical analysis. You don't really care about the fundamentals. And that's also why you say you're agnostic in terms of various asset classes or what have you.
Yeah, listen, there's no question that the fundamentals are what drives prices. It's just that a lot of investors think that the market cares about their fundamental analysis. It's like, no. It's not your opinion of the fundamentals that matters. It's the market's opinion of the fundamentals that matters. So because we know that, we just follow the market itself, right? As opposed to people's opinions on the market that may or may not be true, but we know that the market's opinion is true. So we're just going to follow that.
Right.
So that's what that means. So we care about the behavior of asset classes and the price changes and momentum and relative strength and rotation and things of that nature versus how many shoes did Nike sell?
Right, exactly. And the market doesn't lie, right? I mean, you see
do they even
the
still
price,
sell shoes? I don't even know.
I guess they do. All right, well, Jason, let me just get your first take because everyone's trying to figure out really where the big picture market's going, and we're going to drill down into certain sectors and stocks that you like, et cetera. But big picture right now, what's the S&P looking like to you?
Listen, the S&P 500 is just a mess, right? And the reason it's a mess is because it has such a high weighting to large cap growth, right? I mean, the technology is like still 25% or something ridiculous when you add the communications, which is Facebook and Google, when you add consumer discretionaries, which is Amazon and Tesla. What people fail to remember is that Amazon and Tesla are not tech stocks. Amazon and Tesla are in the consumer discretionary space. When you look at Facebook and Google, again, not tech stocks. Those are in the communications index, which has been the worst index over the last couple of years, by the way. And it's half the index is those two companies. So that's not even the technology that represents a quarter of the S&P 500. Now add all that other stuff. Now you're in the 40s. Almost half the index is these mega cap growth stocks. Remember a few years ago, people were like, oh, JC, it's only 5 stocks driving the market. Well, remember those kind of good times? This is the opposite of that. Everything else is working, right? So in my opinion, in my estimation, we've been in a bull market for 7 months. Stock market bottomed in June the 16th. That was the peak in the new 52-week lows list. That is the worst things were, right? And then since then, things have gotten progressively better. You're not seeing that in the mega cap indexes per se because of all that growth exposure. But look at something like the Dow Jones Industrial Average, which is 7-8% from new all-time highs.
Yeah, people don't see that or feel it. That's for sure. But you're right. It's because of the extra weighting of these large cap or mega cap companies. But that's interesting. You actually think that we're in a bull market from a technical perspective.
There's no question. Catherine, listen, we're not rookies here. We've seen enough of these cycles. You and I both, right? We know.
Yeah.
What happens in bull markets? What are the things that happen? More stocks are going up than going down. More stocks are making new highs. Fewer stocks are making new lows. You get sector rotation. If it's not one sector working this week, it's a different one taking over that leadership for a week or two or even a month or even a quarter, right? The leadership regime changes. Positive sector rotation, breadth expansion. More sectors are going up. More industries are going up. More countries around the world are going up. Fewer countries are going down. True. Fewer countries are making new lows. Call me crazy, but you tell me, is that what bull markets are like? Am I wrong?
Well, I guess the one thing I hear
They're not a bull market?
And I don't know. It doesn't feel like it, but I hear exactly what you're saying. If you actually kind of just, look at the various sectors, but
people want to get off fancy with their algorithms into this, into that, or you could just count. Are more of them going up or are more of them going down? Is it easier to make money from the long
Okay.
side? Is it hard, is it harder to make money from the long side? Are you being rewarded
We'll take a
for
quick
putting
break.
money to work on the long side, or are you being rewarded for your shorts? Money goes to where it's treated best. And our longs have been doing great
Yeah.
and our shorts have not.